Today in this session we will learn two things: how to buy an option in the TWS platform, how to sell an option, how to open an option strategy. So TWS platform is the brokerage platform for from Interactive Brokers. It's not just Interactive Brokers use it; it's also used by other brokers. So if you are using Trader Workstation TWS platform, this you will be able to see the same platform for all these brokers. You could use this learning. You can apply this learning also in those brokerage platforms. So before you start buying or selling options, there are a couple of groundworks you need to do. First, you need to set up the platform. What do I mean by this? So if you look at the screen here, in order to buy or sell options, you need to have option chain ready. You need to have the graphs ready. You need to have orders ready. You need to have the portfolio tab ready. All these things should be ready before you start. So how to do this? I have created another video on the groundwork, how to set the platform. Please look at the top right corner. You will see the link to the video. It is also given in the description in the video. Now, second thing is to subscribe to the live data feed. You need to subscribe. You need the real time data about the options. What do I mean by this? Here, if you look at the option chain, so in the middle you have the option prices. So this is Apple, and in the middle you see the prices 170, 175, 180, and you see the put side option prices, call side option prices. What you see, the prices that you see here, if you have not subscribed to the real time data, it will be around 50 minutes late. So it's very dangerous to buy something based on without the real time data. So subscribe to the data. It costs like $5-10 per month, depending on what type of data you want. So subscribe to only the data feeds that you're going to trade. So for example, if you're trading only, if your plan is to trade only S&P 500, subscribe to only index options live data. If you're trying to buy only Nasdaq listed stocks, buy Nasdaq listed stock data feed, just to save the cost there. Okay. The third thing that you need to do is cash or margin account. So if you do not know cash or margin account, please write a comment under the video. I can create a video on cash or margin account. So you need to make this selection in the brokerage account. Such a recommendation is to go for margin account because you get much more. You have the leverage there. You don't need to spend your whole money for buying and selling. You can buy more with the money from the broker if you are going with the margin account. Next one is to convert the currency. Imagine you are living in the euro area, and when you do that, you are transferring money to your bank in euros. But and if you are trying to trade a Nasdaq listed stock, your trade is going to be in USD. So in order to do that, recommendation is to do the conversion upfront, meaning before you start the trading, you take about the amount of money that you're going to use for trading, convert the whole amount into USD, do the trading, and convert back only when you need to transfer back to your account. It might be possible to do the spot conversion, but it may not be in your advantage because you're paying you have a cost every time you do the transaction, your conversion. Next thing, analyze the price action. So I created another video just to about the graph price action analysis. Look at the video. It is in the top right corner, also in the video description. You need to analyze the market to know your view of the market, your view of how the price is going to change for this particular stock, and only based on that you should buy or sell an option. So do that, and before you do buying or selling an option. And if you do not know, if you want to know more about how to do the analysis, I have created a very short video on price action analysis. Check out that. Now once you're done that, you're ready to go. So first let's look at the option buy. One of the main thing that you need to keep in mind is the time decay. So meaning um, the price, if let's say this is Apple stock, so let's go to the today's the next expiry date, the option stock, and the price of 167, call price is 1.31. If the price doesn't change, if the price doesn't, if remains here for couple of days, what happens is the price will automatically go down. That is the time decay. You can read about time decay of options, and this is something that you need to really keep in mind. The more the option is close to the current price, it's much more dangerous there. So you need to be very careful, or keep in mind about the price, the time decay, the decay of the value of the option when it get closer and closer to the expiry date. So what people do, so if what people do while buying an option is to take a time that is far ahead, so that this impact of time decay is very low. What do I mean by this? Let's take Apple. Yeah, so this is Apple, four different graphs of Apple 5 minutes chart, Apple 15 minutes chart, Apple hourly chart, Apple daily chart. um, so daily, today as you see, if you look at the Apple chart, you see on a daily chart, you see that price is has gone up, gone down here, went up, again came back here, went up, came back here, again went up, came back here, again went up, came back here. Now it's again going through another phase. Looks like it's going to go up. It can also happen that it break down, but it looks to me that it might go up. Yeah. So if you look at the hourly chart now, it's also shows indication that it might go up, and you see it's going up the EMA 20 levels in the middle. So there's a possibility that price may go up. So what we want to know is, what we want to do is, we are bullish now about this Apple stock. Now, when we are bullish and we want to buy the Apple stock by a call, meaning we are bullish on Apple, and we predict that the Apple prices are going to go up in the next 3 days. So in the next 3 days, Apple prices are going to go up. So there are two options. You can buy a call option in expiring next 3 days, or you can buy a call option for Apple expiring a little far ahead, let's say in 3 4 days. So but the difference, have a look at the difference. So option at 170, call option at 170, expiring 3 days, cost 46 euros, 46 USD. Call option expiring after 17 days of 170, the cost 310. But the risk here is, if the price doesn't change, the value of this 47 will go down and down and down. So this is a trade-off. What people do is, we do, if you want if you want to keep the, if your prediction is that in the next 3 days prices are going to go up, you don't take the this one, you take a little further ahead, not too far, but not too close, a little far ahead. So this is 1 week later, so you take let's say 270. So why do we do that? It's because the time decay will be slower compared to the one that is here. So imagine the price did not go up. Yeah, that is the main thing. So imagine the price went down, started to go down in the let's say tomorrow. So then the decay of this price will be very low when you are taking a little ahead in time. So what you have to do is just click here, and you see option here. You have to switch it on. It's important. So when you get the platform, you will get like this, and you need to put the strategy builder on. This is where you see that you are going. You can see what you're going to do. So you're going to buy a call option expiring on 3rd May. Strike 170. and delta 38. um, and the bid ask price is, yeah, we're going to take a middle one, and you have a debit, meaning you are going to pay 246 dollars to buy this. So this is a debit. It goes from directly from your brokerage account. They will debit this much amount to buy this call option. But yeah, so imagine the price goes up, and then there is a this 247 will become maybe 347. um, this is what our expectation is, that the price will go up. So this is why we are going to going to buy a call option. So in order to execute this, you press here, and here you can actually see your performance per profile. What does this mean? This shows the your risk return graph. It says your maximum return is infinity. So meaning basically, if the price can go, there is no limit to which price can go. So that's why it's theoretical infinite price. And max loss is 248, because that is the price that you're going to pay to buy this option. The maximum you will lose is the price goes to zero, and you will lose for 250. But I will have another video on how to manage the risk. But for now, let's focus on buying this option. Okay, so I sent this request for buying this option at a limit price of 246. Now, just for the time sake, I'll go to the current price and update it.
Order filled.
Okay, so we see one option has been bought. And if you go to now the portfolio field, here you see we bought one contract of Apple. Yeah, here 247 we bought it. So for two, sorry, 249 we bought it. Yeah, this is the current unrealized P&L. You see it here in the portfolio tab. As I told, I will have a different video on how to manage the risk, how to set the stop loss, how to take set the take profit for when you buy or sell options. I will cover in a different video. Subscribe to the channel, then you will be notified when new videos are uploaded. Okay, good. So now we saw how to buy the option. Now going to the selling options, now we have a completely different mindset here. So buying, you are bullish here. Yeah, you think, okay, price is going to go up, and you will jump into the current price, or price goes to the current price and say the price is going to go up, so I will buy that. Now selling option, you have a different mentality. You have to think now in a different way. Selling means you are predicting that the price will not go under certain range. So here, for example, our prediction is, okay, price has gone down. Here, if you look at the daily graph, prices went down. Here it touched the support level, went up, went down, again it went up, went down, went up, went down. So our expectation is price will not go below, let's say, 162.5. So that is our prediction for the market, our view of Apple for the next 3 days or next 1 month. Let's say in the next 3 days, price will not go below this range. Now, uh, in order, when you sell the option, you get the money. So money is credited to your account, not debited. So when you sell an option, you get the money. So here, for example, now our prediction is price will not go below 162. What we will do is, in order to sell the option, we go to the put side, because we are bullish. We go to the put side and press here, and then you have to change here. You're going to sell the option. So this is I'm going to sell the option for Apple. Okay, so I have to change the now the expiry date. So when we bought the option, what we did was we took an expiry not very close, but a little away from the next expire option expiry. But for option selling, we want the option price to decay. That is what we want to do. So your thinking is just the opposite of an option buyer. We want the option prices to go down. So for that, what we will do is we will take a price that is a little far ahead, really far ahead. The what most traders do is above 35 days. That is something that they usually take. It's 38 days is something very good. You sell an option for, let's say, 160. So our prediction was 162. So our prediction is price will not go below 160. So we sell an option for expiring in May 31st. Why do we do this? So if we sell option for May 31st, but we will get 265. So if you're going to sell a naked option means we are selling without a hedging. I will come to this in a minute. We will get around 258, between 258 and 265. Let's say 265. Imagine we are going to take the next expiry for 160. What you will get is 13 USD. You see the difference? It's a huge difference when you take an option far ahead in the, it's not too much far ahead, but about 35 days. And it's because 35 days, it's because there are some analysis done on up to what is the optimal range, optimal date you should take for to get the best option premium. So 35 days is considered as a good one. So that is why I took the 38 days you option. So 265, you will get credited 265 into your account. But usually, when people sell an option, unless you have a wheel strategy or other special strategy, they always have a hedging position. So they always buy an option that is just below. If you are buying put, you will have it below. If you are selling a call, you will have it above. So what does this mean? This means that our prediction is price will not go below 160 in the next 3 days. And if it goes, we have bought a option, a put option to hedge our position. So people usually do like this. So that means you get 263 because you sold the option. You need to pay 154 because you bought an option. So, but in the end, you get credited 104 when you sell this option as a package of buying and selling. So you have a little risk there, but your risk is capped. You have a maximum risk there, and this you can see in the profile here. So maximum but you can earn is 104. That is the premium that you will get when you sell this option. What is the maximum loss that you have? That is the 393. And but the probability is very low. You see, maximum return probability is there's a 71% chance, and maximum loss percentage is only 17%. That is, you can see it here. So now um, you have set your strategy for option selling, and then you set here, and then you press submit. And again, this goes here, and then you can yeah, you can play you can so the ideally what people do is wait for some time, wait like a couple of minutes. If it doesn't move, then you again adjust it. Maybe instead of 4, you go to maybe 1 and see if there is some buyers there.
Order filled.
Okay, you got it done. So you got it sold for 101, and use again, you see this option here. Now we have sold an option with a hedge there. It is also called vertical spread, or in this case put credit spread, because you sold put option. That is what you see here, bull put. you paid this is the price, and this is the current price. You can see your this current one that you sold here. Okay, good. So you can also see the call one that you sold. So this is that we bought, and this is what we sold. Yeah. Okay. So what we did was, we until now we bought an option, we sold an option. Is there If there are any question regarding buying an option or selling an option, please send write your comments in the below. I can reply back or create a video to explain how to do this. Now, I also told about option strategy as the third thing that we will learn. So if you go here in the TWS platform, you see different strategies. um I never use this, yeah. Because sometimes it doesn't work properly in the way you want. So you can directly take one here, and then it will show you what you need to do, where to click, and so on. But I usually do this myself. So let's say you want to do an iron condor. If you do not know iron condor, please, I will be publishing a video on how to open an iron condor, how to select the strikes for our iron condor, how to manage the risk in iron condor. Subscribe to the channel, and we will be notified when I publish this video. So let's say you have an iron condor. Iron condor is basically you sell an option and you buy an option. So we don't want an iron condor, we do it ourselves. So okay, it's not going away. So basically you sold an option here, and you also sell an option higher here. So you need to here manually change it. So basically you can see it here. This is an iron condor. So you sell a call option up here, and you sell a put option here. So then you have your prediction is the price will be between this range in the next 38 days. So this is iron condor. So this is a option strategy. So when you do this, you get a credited 31 USD. um, let's go with 35 as the middle price of this ask and bid, and then you press submit, and you can actually look at the profile here. So if you look at this, your maximum return, it is 31 USD, and then there's a 90% chance of getting this, and the maximum loss is 466, and there is only a 4% chance for that. Okay, so you can execute this strategy for the iron condor. You see here iron condor, and then you transmit. And again, if you're not getting filled, try to move the price a little bit. Wait, sorry, it's not 35, it's a 34. Nobody's going to buy 45. 33. Update it. Nobody's buying. Let's move a little bit. Or we wait. So after a while, come back again and check how this is, if it has filled. If not, move the price a little bit more and see if we can get a bit, if we can get it done. So 30. Yeah. So you need to wait to get it filled. If not, you need to change your offer a little bit lower and lower and see whether it can be filled. This is how you do. Okay, good. So until now, what we did, we learned about buying option, we learned about selling option, we or let's say we learned how to do this in the platform, and we also learned how to execute this option strategy in the platform. In this case, iron condor. Yeah, so that means you are all ready to buy or sell options in TWS platform. If there is any questions, let me know. Subscribe to the channel so that you get notified whenever a new video has been published. And if you like the video, please give a thumbs up, so that the algorithm also knows that you like this type of videos. Thanks a lot, and see you in the next video.